I'm Matt Bishar with REIT.com here in Atlanta for REITWorld 2014, NAREIT's annual convention for all things REIT. Joining me for the CEO Spotlight is John Case, the President and CEO of Realty Income. John, thanks so much for joining us.
Thanks for having me.
Now, the reliability and strength of its dividend is really at the core of Realty Income. What is the key to earning and now maintaining this reputation as a real value provider?
Well, it takes a lot of time, Matt. We've had a 45-year history of paying a dividend that's increased over time on a monthly basis. Since we went public in 1994, we've increased our dividend every year, so all 20 years, at a compounded average annual growth rate of just under 5%. So we've been very pleased with that growth. Most of our decisions within our business are based upon the sustainability and durability of that dividend. So it guides all of our investment principles. The diversification of the portfolio helps contribute to the reliability of that dividend.
And can you talk a little bit about your acquisition activities so far this year and how you're seeing the pipeline moving forward?
The acquisitions market, Matt, continues to be very active. We have sourced $21 billion worth of acquisition opportunities year to date, and we closed $1.24 billion in acquisitions year to date at a yield of 7.1%. So the environment remains very active, and one that we would expect to continue to remain active going forward. For the year, we expect to close approximately $1.4 billion in acquisitions, which would make this our second most active year in our company's history for closed acquisitions.
And lastly, I wanted to ask you how your company is going to be affected by one of the biggest demographic factors out there, the baby boomers, and how Realty Income appeals to this demographic.
Well, Matt, we're mindful of the demographic trends and all of our investment decisions, and we think we have a portfolio which appeals to baby boomers. Baby boomers are now moving into their retirement years, and many of them are on fixed income. So an example of how our portfolio appeals to them is many of them on fixed incomes are looking for low price points in what they buy, and two of our largest industries are club stores and dollar stores. Dollar stores also have the added benefit of having a smaller footprint, and a smaller footprint is easier to navigate. So a 9,000 square foot store is appealing to the aging demographic. Additionally, our third largest industry is drugstores, and drugstores are certainly receiving much more business in their pharmacy area, but also the front end of the drugstores, which are also very convenient places with the smaller footprints for an aging demographic to shop. So we think we have several areas of the portfolio that appeal to this demographic.
Great. John, thank you so much for joining us.
Thanks for having me, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.